for Blockchain Week, New York City. Joining me for this segment, we have Kane Warwick. He's the founder of Synthetics. We're going to take a look at synthetic assets on Ethereum. It's great to have you with us at MarketSite. Now, this sounds interesting when you talk about synthetic assets. Is that like what we commonly think of as derivatives?
It's similar. The big difference for us is that we use a price feed that's sent into the blockchain, and then the asset tracks that price feed, so that we don't custody the underlying assets. There's no sort of financial engineering in the background other than that price feed going into the blockchain.
All right. Now, do you find these synthetic assets, are they useful? Why are they useful?
They're useful for a number of reasons. So we've got Forex currencies. So we've got about 6 different fiat currencies we support. We support gold and silver. We also support other crypto assets like Bitcoin. So you can get synthetic exposure to Bitcoin on Ethereum, which is very interesting for trading on decentralized exchanges.
All right. So what's the advantages of these assets on the blockchain then?
That's a good question. I mean, permissionlessness is one thing. So, they're accessible to anyone, which, for example, gold, right? Gold, you can obviously have physical possession yourself, or you can use a custodial service. But in this case, anyone who's got access to Ethereum can have price exposure to gold, which is, pretty nice if you are in, an emerging economy.
What do you think of the latest Tether controversy?
It's not ideal for the market. We do want people to have trust in these assets, and so when you have custodians for any asset, there's counterparty risk. And so one of the nice things about having a permissionless system on Ethereum is that you remove some of that counterparty risk. There's still different risks, there's different trade-offs, but you don't have to trust someone to custody the assets.
Would you say Ethereum's the best platform?
Yes, definitely. Yeah, absolutely.
And why is that?
I mean, at the moment for decentralized finance, a lot of the protocols that are being built on it are interoperable. So there's things like token sets, there's lending platforms, and all of them, because they're all on Ethereum and they're all open source, can be connected to each other. And so that's kind of emerged as this DeFi, decentralized finance movement.
All right, Kane, thank you so much for joining us at MarketSite. And thanks for joining us on Trade Talks. I'm Jim Malandrino, Global Markets Reporter at Nasdaq.